we're going to see an increasing number of defaults, but that is going to basically lead to opportunities in terms of acquisition finance.
Where do you expect the best opportunities over the next 2 years in private debt market?
The best opportunities are going to be driven by some of the macro and micro factors that are driving flows into the asset management industry and the private debt industry specifically. And the first one is there's a global move to basically decarbonize. So there's going to be a lot of opportunities in this space. So I would advise any company that doesn't have any capabilities in this space to continue to build, particularly for retail clients, because they're still under-allocated in this space. The second driver is going to be due to high inflation and high rates. We're going to see an increasing number of defaults, but that is going to basically lead to opportunities in terms of acquisition finance, particularly for your small to medium-sized companies that might be in very high capital-intensive industries and that are basically bearing the brunt of the cost of capital. And then another theme that we're seeing is around tightening lending standards, and that is opening up opportunities for asset managers in the private debt space, because banks are basically kind of retreating from some of these areas. So the opportunities that we expect to see in here, sort of your asset-based lending and some of the areas, healthcare receivables, areas that banks used to dominate fund finance, where they might no longer see value in those areas. And then finally, there is a global trend of reshoring, which is called friendshoring. And that is really going to raise a lot of opportunities around capex acquisitions. So this is going to also be supportive of asset-based lending space as well.